Hey guys, what is going on? Welcome back to the portfolio. Welcome back to the channel. Great to have everyone back on the YouTube series as I do with all my videos. Just quickly want to say thank you to all the viewers and all the subscribers supporting the channel. Immensely appreciate that. For today's video, this is in response to a few viewers on the channel wanting to know a little bit more about dividend capture. If you guys have been on the portfolio for quite some time, you guys know initially when I started the portfolio, I did dividend capture quite a bit. Essentially, you jump into a stock before its ex-dividend date, you capture that dividend, you qualify for that dividend payment, and then you sell the stock off shortly thereafter. Again, you qualify for the dividend, and then next week you do the same thing, continuing to capture dividends in other stocks. Just a quick reminder here for new viewers on the channel. These are the dividend dates. You can see when the dividend is announced, the ex-dividend date, which is the important date that we'll focus on in today's video, the record date, and the dividend payment date. So this is just a hypothetical example here. September 1st, the dividend is announced. November 1st, this is the date you have to pay attention to, the ex-dividend date. If you buy the stock on this date or thereafter, you do not qualify for the dividend. So for example, if the ex-dividend date on a stock is November 1st, if you buy it before that date, you qualify for the dividend. It could be one day prior to the ex-dividend date. The next day, on or after the ex-dividend date, you can sell the stock off, but you still keep the dividend. The dividend does not go away. Then typically a couple days later is when that is recorded, and the dividend payment date is typically a couple months thereafter. But again, the important part is that you buy before the ex-dividend date, and if you're holding the stock on the ex-dividend date the day prior, you can sell off on or after the ex-dividend date and still qualify for the dividend. This is a strategy I used in the past. You do need to take into consideration that the stock will always drop by the price of the dividend. So for example, if a stock is $1, the dividend is 10 cents. The next trading day, typically that stock will open up at 90 cents because stocks move quite substantially often around ex-dividend dates. That could trend back up, you sell it off, you keep the dividend, you sell the stock off, maybe for the same price, maybe more than you bought it for, or maybe a few cents less. As long as it's higher than the dividend that you received, you are going to make a positive profit, and then you can essentially repeat that process moving forward. Again, you do have to take into consideration taxes you have to pay on the profit. So if you get a 10-cent dividend, you're not necessarily getting 10 cents because you will have to pay a proportion of that back as tax. And this is a great strategy to initially try to capture some dividends. The stocks that you're going to do this strategy in would be stocks that you don't mind holding for the longer term. I have a couple stocks today that we'll talk about. A couple buy and hold stocks that I think have some compelling reasons to buy the stock and hold it longer term, and another stock that's going to be having a special dividend, which I don't think you'd want to hold the stock for longer term. It could be a little bit higher risk play, a different type of strategy to utilize. Again, responding to a few viewers on the channel wanting to know exactly what dividend capture is all about. So let's go ahead and take a look at the portfolio. Let's scroll down. There are three stocks I want to talk about today. The first one is Exxon Mobil, XOM. I do have this in the portfolio. This was one of the original stocks in the Robinhood portfolio when I established this back in 2016. XOM, you can see I have 11 shares, and Exxon has been doing very well of late. As you can see here, 1 year graph, kind of stagnated, and then definitely has picked up as gas and oil prices have increased over the last few months of trading. 3 months here, you can see it's up 24.34, 1 month 20.61%. So this has been trending up quite nicely here. If we scroll down, you can see dividend yield 4.287%. So for Exxon Mobil, again, thinking about the dividend dates, the ex-dividend date will be 2/9. So you have to buy this before the 9th. So if you buy it on the 7th or the 8th, you'll qualify for the dividend. And then on 9 or thereafter, you can sell it off. You still qualify for the dividend, and then use that capital for next week, looking at other stocks utilize this particular strategy for. You have to buy it before 2/9. You can sell it off on 2/9, which is the ex-dividend date, and then the payment date of 88 cents will be on 3/10. Exxon Mobil, gas, oil company. I think there are some compelling reasons to get into the gas and oil industry at this point. Gas prices have definitely been rebounding. Profits have been increasing as well. Let's go ahead and take a look at earnings per share. You can see steady income increases here. The last earnings per share, $2.05, beating the expected of $1.89. So it's definitely been doing very well over the last few quarters of trading. And again, that is reflected in the stock price. increasing here. 1 week, 7.91%, 1 month, 20.61%, and 3 months, 24.34%. Exxon Mobil is the first stock. Let's back out and go to another stock I have in the portfolio, IBM, International Business Machines. Much like Exxon Mobil, was stagnating, but of recent has been increasing the price, 2.32% over the past 1 week of trading. 1 month, kind of an up and down pattern, 1.12%. 3 months, however, 13%, 12.99%. You can see it's definitely been jumping up and down over the past 1 year of trading and kind of stagnating here, trending down for the last 5 years. But I think there is an inflection point here moving forward. IBM has been going through a transition process, been transforming its company. It's been acquiring some underlying businesses. It's been trying to slim down its operations, but I think it is positioned for success. It is back in revenue mode. If you take a look at some of the fundamentals here, earnings per share, as you can see on the bottom, has been doing quite nicely, just like Exxon Mobil. Actual earnings per share, $3.35 versus expected $3.14, and you can see it's been trending up for the last few quarters of trading. So just like Exxon Mobil, the ex-dividend date will be this upcoming week, 2/10. So again, you have to buy before 2/10 to qualify for the dividend, 7, 8, or 9 of February. You can sell off on 2/10 or thereafter to receive a dividend of $1.64 per share, about a 4.9 or 5% dividend earnings per share percentage-wise. And the payment date will be the same as Exxon Mobil on 3/10. So a couple companies here, Exxon Mobil and IBM, having regular dividends. If we take a look at another one that's having a special dividend, here we go, Sirus, XM. This will be having a special dividend. The ex-dividend date will be 2/10, 25 cents per share with a payment date of 2/25. So this one is a little bit more risky type of stock to get into for dividend capture. You can see 1 year, kind of an up and down pattern. 5 years here as well. Not a lot of price movement. 1 month, it is up 7.78%. And it does have a number of nice articles here talking about its upcoming dividend, whether this would be a good buy or not to get into Sirus. I personally would not jump into the stock. I don't think that this is a good buy and hold stock for the longer term. If you do get into the stock, you capture the dividend of 25 cents per share. But if you have to hold it longer term, I don't think you'd want to actually do that. I don't think this is a great company to hold longer term. There are some investors that may feel differently. If we take a look at the earnings per share here, you can see just marginal earnings per share, 8 cents in the last quarter, 7 cents expected, actual 8 cents. You can see here it's been profitable, but barely profitable. So I'm not looking to hold this longer term, but again, just wanted to kind of contrast this stock against a couple other stocks that I think would be a little bit better buy and hold stocks, Exxon Mobil, XOM, and IBM, International Business Machines. So just wanted to quickly go through that in the portfolio. Again, responding to a few viewers on the channel asking about dividend capture. It is an okay strategy to utilize if you are looking to get into a stock, potentially capture the dividend, and then get out, and then repeat that process moving forward week after week. I've kind of switched over to options. I think that's a little bit better play with regards to doing this type of strategy. Different types of strategy for different investors. Just wanted to quickly go over dividend capture. Exxon Mobil, XOM, IBM, International Business Machines, and Sirus, XM, SIRI. So with that, I'll end this video. Again, if you guys have questions on exactly what is happening around the ex-dividend date, when the dividend is announced, the ex-dividend date, record date, and dividend payment, please let me know in the comment threads down below, and I'll try to do an updated video to better have some clarity with that. The big thing is you have to buy the stock before the ex-dividend date, and then you can sell the stock off on or after the ex-dividend date, and you still receive the dividend. Even if you've only held that stock, you're holding the stock for 1 day in the portfolio, it does not matter. All that matters is that you hold it prior to the ex-dividend date. So with that, I'll kind of end this video. Again, if you guys enjoy the content on the video series here, if you guys enjoy the content on the YouTube channel, feel free to like, share, and subscribe. Until next video, we'll see you then.